Hello, chart watchers, and welcome to this Monday, April 22nd, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on to start off this week. We got the Dow Jones Industrial Average near the high of the day, but still down 18 points. The S&P 500 has moved into positive territory, up less than 1 point. The NASDAQ currently up 2 points. The Russell 2000 continues to lag on a relative basis, down about 8.5 points today. 10-year Treasury yield moving back to the upside. I'll talk about this in just a minute, but up 2.5 basis points back to 2.59%. Volatility continues to be under pressure over the intermediate term, continuing to trend lower. We are up slightly today, maybe a little more than slightly, about 5.8%, but we are off the earlier highs. Energy making another breakout, or at least trying to make another breakout today. There is your leadership today, lagging and continuing its week-long move to the downside. Real estate, the XLRE, down 1.7% so far today. The exploration and production stocks leading the energy group to the upside. You can see a beautiful breakout of a bull flag. A flagpole established about a week and a half ago. Sideways action last week, making another breakout. Very bullish there. Distillers and vintners coming off the lows that we saw back in mid-March, continuing their stellar move to the upside. This was another really nice flagpole, flagged for a couple of weeks and breaking out to the upside. Distillers and vintners looking very good. Within the energy space, the two Dow components that earlier were the top components, ExxonMobil and Chevron. You can see both having very strong days, leading the Dow and also leading energy higher. All right, Erin, hope you had a really nice extended weekend last week. How are you doing?
I certainly did. I hope you did as well.
I did. I was off Thursday, so I took a little trip down to Greenville, South Carolina. I'd never been there. Really nice little city. Went down near the Riverwalk. Beautiful area. Had a nice dinner down there. Really, really nice place to go, get away.
Yeah, it looked like you got a little golf in too.
I did get a little golf in. I played last Thursday, and I played again yesterday. So I've played twice in the last 4 days.
Wow. Good for you. I know that's your kind of vacation.
Yes, it is. I enjoy playing golf, and I enjoy playing better golf. I could have played a little better, but overall, not bad.
Yeah. That was a very relaxing weekend. It's always nice to have that extra day on the end. So,
yeah, long weekend. Of course, getting back into it today, and we don't have really any time to rest in the market because we have earnings season really beginning to kick in. So it's going to be very busy these next few weeks with earnings rolling in. Saw a lot of the big companies here in the last week and a half, but more of the big companies, and then those maybe second tier companies are going to be reporting here in the next week or two. It's going to be interesting to see whether or not this rally is sustainable based on the earnings we see.
Absolutely.
All right. Well, we might as well jump right in. What do we got?
Yes, let's just do this. Okay, our upcoming schedule. Tomorrow you have a workshop. Not sure what that's going to be on. You probably don't know either, if I know you.
I have two things in mind, so you don't know me quite as well as you thought, but I haven't picked which one yet.
Okay, well, we're close. Danielle Shea, she is an options expert trader, so you'll want to stay tuned for her. She'll be on Wednesday. I know people ask about options. And then on Thursday, we will continue to debut our new segment, Talking Technically, and you'll want to tune in for that, see what you think. All right, today's agenda, we're going to start off after the news and headlines with Monday setups. Go take the poll, because we're starting to do that with our Monday setups. Earnings Spotlight, John Hopkins will be in with Tom to discuss that. 10 and 10, our first symbol will be Tableau software. Data is the symbol. And then we will finish up. I will do the sentiment update and let you know what I'm seeing as far as the feelings and the cash flow in the market. All right, let's get started. Technical news and headlines.
All right, we had a couple of reports. I had actually one report and then a revised report, but you can see the March existing home sales came in a little less than expected, 5.2 million units roughly versus 5.3 million. But the February existing home sales also were revised down from 5.51 million units to 5.48. So a little bit of a double whammy there on the housing group today with the existing home sales. They came out at 10 a.m. this morning. As far as the reaction in the bond market, we have seen a move back to the upside. And I just wanted to point out a couple things here on the chart for the TNX. The last couple of times when we went through that 20-day moving average, notice the 20-day here really never even turned up. We just kind of went sideways, and then we started rolling back over again. Here we actually did turn up, but couldn't get through the 50-day moving average, and then rolled back over, ended up going to new lows. A couple of other things to notice. Both of these moves above the 20 and this one above the 50, we could not get through the center line on the PPO. Got right up to it beginning of March, couldn't quite get through there. And both of these times we went through the 20-day, looked like we were starting to strengthen. We never went above that first high when we went through. So we pulled back. We're never able on additional strength in the yield or weakness in treasury prices, never able to send that yield higher again. We did that both times, went up, set that initial high, and then rolled back over. What I'm looking at right now is we did get through the 20. The 20 is turning back up. We'll have to wait to see. There's a lot of work to be done to get the 20 back above the 50, but that would be a positive. Notice here, the PPO has just turned positive on the 10-year treasury yield. So we're starting to get a little bit more momentum to the upside here on this move in the 10-year treasury yield. So I think if we can get back through 260, that would then add to the confirmation that we're seeing with the PPO. Something to keep in mind, because if the 10-year treasury yield continues to push to the upside, that would benefit the financial group, which has been beaten down on a relative basis for the last year. This is something to keep in mind. I wrote about it in my blog, looking at the financials. I know it's easy to kind of put them to the side because they've been so weak on a relative basis. But if you go back to the end of 2016, throughout 2017, and into the early part of 2018, financials were among the leaders. So if that 10-year treasury yield begins to show more bullish characteristics here, we definitely want to watch the financials as a result. All right, talked earlier about earnings reports. Well, they are starting to heat up a little bit. Thursday after the bell, Intuitive Surgical reported, came in below expectations on both revenues and earnings. The stock being hit pretty good, or at least it was earlier. We'll take a look at that one in just a minute. Other stocks that reported this morning, Kimberly-Clark beat on the top line, beat on the bottom line, reaffirmed guidance, was looking really good earlier. We'll pull that chart up as well. Halliburton, not so bad. We matched earnings expectations. Talk about that one as well in a minute. Granger beat, Lennox beat, Steel Dynamics came up a little short. And you can see tonight after the bell, we got some stocks reporting, and then, of course, more tomorrow morning. And it's just going to continue to escalate as we go throughout the next week, really throughout the next 2 to 3 weeks. We're going to see earnings continue to pour in, and we'll find out whether or not this rally that we've seen in the S&P 500 is warranted. Okay, as far as the stocks, let's go ahead and first pull up the Intuitive Surgical chart, because this is one, like I mentioned, they did report last week. Look at the gap down today with the heavy volume. Already traded over 2 million shares. We're not at the halfway point of the day. So this is a stock that looks like we're going to trade over 4 million shares. And if you look back, that would be by far the heaviest volume day in the last year. And it's not with positive price reaction. So this is not good action on ISRG. Of course, this is in the medical equipment group that also has been really having a hard time over the past week or maybe even 2 weeks. And the healthcare stocks we know have been getting hit really hard. So ISRG is not helping, coming through and with its earnings report, missing on the top line, missing on the bottom line, and getting this kind of reaction. Not good news for the market. Certainly not good for medical equipment stocks and the healthcare space. Kimberly-Clark mentioned that we had a really nice report. Check out the reaction. Look at this move to the upside after going up, putting in a little bit of a cup, maybe a little handle on Thursday, pulling back to the 20-day moving average. We did get that breakout, volume strong. Kimberly-Clark looking really good, part of that consumer staples area. Didn't mention it at the top of the show, but the last time I looked, consumer staples were in that second spot beneath energy. Quite a ways below, but still in that second spot today, having a pretty decent day. Halliburton, they did beat on their top line, just matched expectations on the bottom line. And word from management, this was a quote, for the next couple of quarters, we see demand for our services progressing modestly. Well, that's all nice. Sounds good. I'm looking for a breakout, and I don't see one yet. It does look like maybe we're in this bottoming, sideways consolidation, but earnings could have been a catalyst here to get the breakout. Maybe it still will by the end of the day. We're off the earlier low, but I'd want to see a breakout on Halliburton above 32.5 on the close. WW Granger, GWW, negative reaction to its earnings report. It missed on its top line. It beat on its bottom line. I think until it can get back up through about 320, this is one that I would just sit on the sidelines. I believe this is a stock that I mentioned either in momentum sleepers or under the radar within the last week or so, but I wanted to get that breakout above 320, so I'm watching it, but even with earnings, we're not getting it. So far, holding on to the recent price support around 290. So I'd look at this stock more of in a trading range between 290 and 320. Lennox International, LII, did move down below the 20. Got a little bit of uncertainty. We've seen the stock up off of the open earlier today, quite a bit lower, and now it's just kind of unchanged from the open. They beat top line, beat bottom line by a really wide margin, $1.68 versus $1.39. And this is a perfect example, I think, of a stock that was trading really strongly heading into earnings. They reported great numbers. They beat top line, beat bottom line, but the stock still went down. Buy on rumor, sell on news. I think that's exactly what we have here with LII. I like the chart. I think if we were to pull back into the 250s, maybe get a 50-day test, I think that could be a very strong entry into the stock. They obviously have a lot of momentum going. Their revenues, by the way, $790.3 million. The market was only expecting 748.6. So that was a beat of about 6% over estimates. That's a big beat on the top line. Bottom line, $1.68 versus $1.39. So obviously they got a lot going in their business, and this is why we like to look at these relative charts and follow the price action, because here's a beautiful breakout, beautiful move heading into earnings. I would have expected strong earnings. We got the strong earnings, and when you look down, this is a stock relative to its peers that has been rolling to the upside, rolling versus the S&P 500, even though we haven't yet seen a relative breakout in its peers. So perfect example, I think, of a stock that was kind of forecasting in its chart that it was going to have some nice results. Steel Dynamics missed on the bottom line, did beat it by a little bit on the top line. This is a stock that's really just struggled. You can see steel not being able to break above the February high, and when you come down here to the bottom, steel relative to the S&P 500 moving to a new 52-week low. It's not a good group, and steel coming up short on its earnings, not great sign there. So I want to be careful. NVR in the home building space did report. They beat top line, beat bottom line. You can see another one that really started to strengthen heading into its earnings report, coming through with a great reaction, trying to make this breakout above the 3,200 level where we topped back in June. A couple of other things I just want to mention real quick here. IPOs. A few weeks ago, Lyft came out. You can see continuing to struggle since its IPO, gapped up with the IPO, and then has been selling off for the most part since. Two other IPOs came out on Thursday. Zoom Video Communications, you can see it was actually well above the offering price, opened up around 65, continuing to show some strength here. And the other one was Pinterest, PINS. And that's another one that also gapped up above the offering price around 19. This continued to show some strength. So even though Lyft has moved down since its IPO, just wanted to point out that not all IPOs at this point are under selling pressure. Some there is a lot of buying pressure still in a couple of those. All right, Erin, upgrades, downgrades. What do you got for today?
All right, let's bring those up. We'll look at 3 upgrades and 3 downgrades. All right, Canopy Growth. I know there's been a lot of discussion about the weed stocks. And as you can see, Canopy Growth really is set up very nicely right now on this upgrade. I like it. Look at my PMO. Just got the buy signal. You can see the nice volume that's been coming in on this rally to the upside. The only thing I'd be a little concerned about right now is the overhead resistance in the short term here at about, looks like what, $48. And then after that, you still have some more overhead resistance at about 52.50. But seeing this long-term declining tops trend line being busted not only last Thursday, but you can see right now trading above that declining tops trend line as well. So I'm thinking Canopy Growth, it might be time to start looking at that one on my watch list again. IPG Photonics. This one was upgraded today. And let me get you some of these numbers. I'm sorry, I'm not on top of that. CGC went from neutral to buy with an upside target of $72. IPGP, B of A Merrill, neutral to a buy signal. You can see a little bit of a move to close this gap. If we can get that breakout, look for the closure, and that would bring us all the way up here to above 220. I just would be watching my PMO to make sure that it doesn't get too overextended. But as you can see, as far as the normal range, it does appear that we are around 7.5, meaning the top end would be at about plus 7.5, and currently we are under 5. So I think there's still room to accommodate more upside, and notice the 50 is just about ready to cross above that 200-day EMA. Next one, Newmont Gold Corp. And in the materials section, of course, sector, Newmont was upgraded today by TD Securities from a hold to a buy. I have to say I'm in disagreement with this one. I was really surprised to see it go to a buy after this almost waterfall decline here. Maybe they're looking at this support area as a possible stopping point and an area for it to make a nice little rebound. But boy, when I see a PMO sell signal and I look at the OBV, look at the volume coming in on this decline. So I'm in disagreement, I would have to say, with that upgrade. All right, let's look at a few downgrades. Duncan Brands Group. It's making my mouth water right now. Maxim Group downgraded it from a buy to a hold, and currently they lowered their target to $79, but they're still looking for a move to the upside here eventually. You can see that the PMO had that bull kiss, looked like we were going to go take a nice move to the upside. We did actually break out above overhead resistance here, but just couldn't hold on to that. And now on the downgrade, we're really seeing that big decline of, 1.86% right now. $74 does look like an area where we might find some support here. But on the downgrade and on this pretty ugly situation with the PMO, I certainly wouldn't be interested. I don't think this is a bottom fishing opportunity there. Schlumberger was downgraded today by Tudor Pickering from a hold to a sell. So we're not even going into the neutral gear here. They're telling us to sell. I don't know. I don't think it looks that horrible at this point. But I know energy has been a little bit, suffering a little bit. And you could see the move off of that December low, certainly not what we've seen on a lot of other stocks. You can see a declining trend here. I'm sure if I drew it, I don't even need to. We haven't even come close to it. 200-day EMA was overhead resistance on Thursday, and it's holding up. So not liking Schlumberger just right now. Tesla was also downgraded today by Evercore from inline to underperform. Looks like they're a bit late on that. The only thing I could say that might be positive here, first of all, we do have a buy signal in oversold territory on Tesla, but let me go ahead and annotate this for you very quickly. Right here, we have a descending wedge, an intermediate term one, and at that, you're supposed to look for the breakout to the upside here. Now, we always talk about bull bear market configurations. That 50-day EMA has a lot of margin between it and that 200-day EMA. So I would be a bit concerned here about looking at a bullish pattern executing with such a bearish configuration right now on those EMAs. But, maybe something to keep an eye on there. Tesla, one of those companies, it's news driven. We get a lot of information that way, but you can see on this downgrade, down almost 3.5%. So not looking too good here. And that's all I have for the upgrades and downgrades. And there you go. Just a couple of other interesting one. Lamb Research, Alcoa upgraded. As far as some of the other downgrades, DR Horton, we saw One Oak. So some interesting ones out there, but I only go over a couple. So I'll have this up in the Market Watchers Live recap if you want to look at those other charts yourself.
I think also, Erin, with Tesla, there was the exploding car in China. They showed a parked Model S that had exploded. So I think that Tesla into it, and I'm sure that's not helping the stock today.
Yeah, absolutely not. So yeah, looking at that bullish pattern, probably not going to execute right now. It sounds more like somebody else might be getting executed here soon. So
yeah, we'll have to wait and see, what they come up with in terms of their research into what happened over the weekend. But obviously, if it's something to do with the manufacturing of the car, that obviously could be a big problem for the company.
Oh, absolutely. It definitely has seen its ups and downs. I mean, what's crazy is, that chart, you've got the December low. Again, so many stocks bounced off of those lows and went way up there. Tesla has been going to declining since then. So not the best one.
All right. Well, it is time to move into our Monday setups. So I guess we'll start with last week. And
all righty, let's look. Yes. I have to say, mine came in last on the poll, but I think I might have done the best. I don't know. I'll have to look at that. Let's bring those up. Get the right screen here ready. All right. So yeah, let's take a look at some of those. I'm going to go ahead. We'll move over here. CGNX, if I hadn't had to deal with today, would have been in really great shape. But I know I was, let's see, it was at 53 or 54.32. So, not bad. We're still up at least 2% there, but I picked it right in here. So not bad. Let's see, yours was, and the audience, both of you picked Sienna. It's certainly not bad. I actually like it now better than before, because once we got that big gap up, obviously the PMO is set up pretty nicely here. So might be one to still hold on to. What do you think?
Well, I own it, so I am holding on to it.
Well, that makes it easy. And for full disclosure, I own CGNX and I'm still holding it right now.
There you go. Yeah, I'm looking for Sienna to maybe make a break above that 39.25, 39.5 area. If it can get above those recent highs and clear that 50-day moving average, I expect you'll see more technical buyers coming in.
Oh, absolutely. This one looks it looks pretty tasty to me right now too. Like I said, I'm getting the setup I like on it. And we got the pullback.
Yep. I will say, though, I had a number of stocks on my setup list I went over last week, and it was probably one of the worst weeks I've had in terms of setups. And I can also say it was probably one of the worst weeks I've had in terms of trading. I don't know what happened. I mean, I kept looking at the market last week, and the Dow was, kind of up most of the time, and NASDAQ was flat to up, S&P was up, and I'm looking at my account, and I'm like, what the heck happened? It looked like an explosion took place in my portfolio last week. Number of stocks that broke down, but ended up getting stopped out on some of them.
Oh, goodness.
But yeah, you have those weeks from time to time. That was one of those weeks for me last week.
All righty. Well, I ran my scan. I kind of went through a couple. You can see here I commented out a few lines on one of the scans that I use, my general PMO scan. I ended up running this one. And really, if you want a lot of choices, this particular scan really seems to come up with quite a few. But I ran it. It was just I had 50-something results, and I just didn't want to go through all of them. There you go, 57. So I'm just going to type in the ones that I found that I thought were interesting from my scans. So we'll just go right on into it. I Abercrombie looks pretty good right now. Look at that PMO getting ready to have the buy signal. OBV volume coming in. We've actually got a higher top than the previous ones, which is what you want to see when you have those rising tops as far as the price goes. You can see we're getting a little bit of the pullback toward that in the thumbnail. You can really see it back to that very short-term support area. So I think Abercrombie looks pretty good right now. Overhead resistance is about $29. I mean, I thought this one looked good. I could certainly have picked that. I think you might be. I couldn't see a broad. I saw a broadening pattern. I didn't see a rising trend at this point. So as far as a rising trend channel, but I like it. I think this looks good. And honestly, when you see there was a double top and it never actually executed when it could have, I think that that's also a very bullish sign. And you can see those EMAs are really lined up nicely. It might have gone for a run, but I like the fact that it is starting to settle down a little bit, probably getting ready to move higher. At least that's what I think. We'll see. CWST. All right, waste and disposal services. This is an industrial choice. You can see the PMO is turned up. I've got a nice scooter going on here. OBV is a little flat, but you can see that we're going to make a higher top than the previous one here, and that's going along with what price is telling us. So I think that's great. Has broken out from a declining tops trend line. And I think there's plenty of upside potential here to get to $37 and make that test. Could move a little bit higher. All right, the next one I had, MODN. Model N Incorporated. This is in the computer services industry. What I liked about this one, well, first of all, it's just about ready to knock out a PMO buy signal here is coming in. Look at the OBV has been rising nicely with price. So I like to see that. Hot zone scooter. And honestly, when I looked at this one in the thumbnail, I think you could certainly make a case for a flag formation here. That's a continuation pattern. So if we get the breakout above $18, the expectation for the move would be about $1.50 on that. So $19.50 would be your upside target. But honestly, I would be looking for the move up all the way to the all-time high. So I'm liking the looks of this one. I think you could see there's $19 would also be a place you could see some overhead resistance. But other than that, I see some pretty good things here for Model N. I might change my pick, actually. I'm looking at this chart and I like it a lot. Okay, PRFT. Actually, I think that one was one of the selections for the poll. All right, here we go. PMO is starting to turn upward at this point. Hasn't actually done everything you want to see it do just yet. But you can see right here, we're getting a short-term breakout. The only issue I had really with this one is there were too many areas of overhead resistance. So even with a short-term pick, I like to find something with a little bit more upside potential. But you could certainly see this one moving above the $29.50 area. I think it certainly could challenge that $31 area. It's just a slow mover. So this one wouldn't be my number one choice for a Monday setup, but I think for an intermediate term investment, this one looks pretty good. And then finally, the last one, NTAP. And there you go. This one's kind of already been on the run. This one would be a little bit of a chasing problem. But, you know, the PMO, while it looks overbought, you can see we've gotten all the way down to -6. It can accommodate more. Everything's really strong on this one. This is where you get in on something that's already showing that strength, relative strength. Everything is there. And right now, we're getting the pullback. So we always talk about getting the breakouts and then hoping for the pullback. We're getting that right now. So I would be watching this one. You could see 75 would be my stop. Really, I'd make this pretty tight. But there's a lot of upside potential here too. So I thought this one looked good, but I think I'm going to pick MODN.
All right. So what was the price on MODN?
Oh, well, let's go back and look. MODN. I will write this down as well. 1784.
All right, 1784 MODN. I am going to go right into E-Trade, not to make the trade, just to start. ETFC. This is going to be my pick for this week. So price currently $50. Well, let me update because I was already on here. Yeah, still the same, $50.63. And I'll tell you what I like here. First of all, I mentioned earlier, financials are starting to turn up. I did pull up the XLF versus the S&P 500. Now, keep in mind, we've seen this relative strength before, only to turn back to the downside. But if I go back a ways, I'm going to go back maybe the last 5 years and look at this XLF versus the S&P 500. And if we annotate, you'll see that we actually came back down. This was that period I talked about at the beginning of the show, end of 16 into 2017 or into early 2018. That's the relative strength of financials for about, 15 to 18 months. And then over the last year, you can see that it's been a struggle. So if you've been trading a lot of financial stocks, probably been having some problems because the group, that whole entire sector has been a laggard for the last year. But the 10-year Treasury yield's pulled back a lot. So unless the 10-year Treasury yield continues dropping, I think we're going to find a bottom here. So we did have a relative breakout. We've gone back down. We went a little bit below and now have come back up. The PPO, that relative PPO, has turned positive. I don't know. I think that the financials continue to strengthen here. So that's the reason why I want to begin to look more at financials. E-Trade happened to make a breakout and on volume with its earnings report. So they beat top line, they beat bottom line. I'm going to treat this as though it is a character change. And so what I would be looking at here, there are a couple of levels to look at. And before I annotate, you can see that we had moved up in the investment services area, put in a double top, looked like we were rolling back over, and then we broke above it. So I think investment services starting to strengthen. You can see that relative to the S&P 500 right here. Now, if we start to roll over, I would certainly have a tight leash on not only on E-Trade, but on the investment services group in general, because we have not seen a lot of relative strength over period. So I'm treating this as though we're changing the character. If it turns back, starts heading lower, I would avoid it. I would exit it. So let's take a look at some of the areas to watch. First of all, we had a double top in play right at about just under $51. The top back in January, the top beginning of March, pulled back, looked like we were breaking down, rolling over. I think that may have just been a false breakdown. Maybe this is a false breakout. We'll have to wait and see. Ultimately, a break above 54, I think, would be extremely bullish to take out that reaction high back in November, that double top. Something to look for down the road. In the meantime, the stock has been acting more bullish to me. And when I say that, I mean it's riding above its 20-day moving average. So the 20-day moving average is rolling up. I think as long as the stock stays above its 20-day moving average, I'm fine with it. That would be roughly about a 3% stop to the downside. But if the financials truly are picking up, then I think E-Trade is one that could roll to the upside. So I like it. We'll see. I mean, it might be a little early on it this week. I wouldn't be surprised to see it maybe pull back at least a gap support around 50. But that's only a little more than 1% away. But I'm going to go ahead and go with E-Trade today. So ETFC is my pick. A couple of others that I looked at as well. Let's pull those up first. And this is the other one that's in the poll. So E-Trade is one in the poll. And then the other one I have in the poll is Verisight, VCYT. And this is one that had a negative divergence, higher prices here, early April, lower PPO, so we're rolling over. So I look for a PPO centerline reset and a 50-day test. We're just about there, not quite. I'm going to say downside on this stock could be to around 22 and a quarter. But I'm looking ultimately for a move back up near its recent high, near 26 and a half. So I think the reward to risk on VCYT looks good. And then just a couple of others to go over. ZS, which is ZS Scalar. Another one, higher prices, PPO rolled over. Look for that center line, the PPO center line, 50-day test. We actually got that nice little hammer printed on Friday, starting to bounce off of that. I like this one down around that 61 and a half area. Last two that I have, NEO. This is one that had been under a lot of accumulation, or at least it appeared to me. Started off with a big breakout back in January, or at least a huge gap up. Heavy volumes continued moving up. Another one, higher prices, lower PPO. We've gone down, put that hammer in last week, right on the 50-day moving average. These couple of recent lows, I think, could be tested, but we now have a pretty good potential move back to the upside to test that 22 area. So I like this one. And then my last one is PTLA. And PTLA is Portola Pharmaceuticals. Of course, healthcare has been getting crushed. This was one of the better performers here in 2019. I think it's just kind of being thrown out, kind of like the baby with the bathwater. But it did put in a nice hammer on Thursday at the 50-day moving average, testing recent support. I think 31, 32 is possible to the downside, but I think your target's up near 38. So if it pulls back and gets closer to 32, I think the reward to risk is really strong on this one. So those were my setups for this week. We can pull up a summary of both of our picks for this week. Erin is going with MODN 1784. I've got E-Trade 50.63, and those are the other setups that we had for this week. If you look at the poll, you will see Erin's MODN and Network Appliance NTAP. And for me, I have ETFC and VCYT. And there will be two other picks there that our producers put together for you. And we'll see what the audience likes as we wrap up the show a little bit later.
There you are. Full disclosure, I did end up going in and getting MODN. So it's in my account right now.
Cool.
Yeah, see how it does.
All right. I do not own E-Trade, by the way. Not yet. If it pulls back a little bit more, I may jump into that one, but I do not own it right now. Mm-hmm. Okay, let's move into the earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. Mr. Hopkins, how are you doing today?
I'm doing good. How about you?
I will be doing better tomorrow if we have a Game 6 victory by our Washington Capitals tonight.
Oh, yeah. That would be awesome. I think it'll be a breeze tonight. I'm giving the HG. That's the Hopkins guarantee.
Oh.
Now, some people might say that's a curse.
Yeah, I'm going to go with the curse.
You know, my wife basically blames me for any loss of any team we follow, but I don't get any credits for the wins.
Wow. Well, you should have gotten credit for the Caps last year. I mean, for all the suffering, the painful suffering that we went through as Caps fans for 40 whatever years, we deserved last year. But
absolutely,
2 years in a row might be asking too much. And I can tell you, some of my friends here in the Carolinas kind of looking at me a little funny when I've been out watching the Caps games, because they're playing Carolina Hurricanes.
I could never understand some places that have hockey. Florida, California.
Hey.
I'm a Detroit guy. Used to be 6 teams. Now there's 32.
Yeah, well, we probably have a lot of Canadians listening in right now, John. They're probably saying the same thing about Detroit, a warm weather city.
Yeah, that's true. Hey, anyways, this is it. I mean, this is big time. Next few weeks, earnings season.
Yep.
Really, kicking off, getting underway. Over the next 3-4 weeks, thousands of companies will be reporting their numbers. This is where we really get involved in the market. And I've got a couple of stocks to go over, if you don't mind.
Let's do it.
Yeah, I want to start with a couple of stocks on our strong earnings chart list. We basically scan the market for companies that report earnings, and we add them to our strong earnings chart list. Have about 250 on a list right now. And these are companies that actually reported and beat the top and bottom line. And there's a couple recently that reported. It's going to take a lot of patience to get involved in them, but these are the types of stocks we like to look at. The first one's Honeywell, HON.
All right.
You take a look at Honeywell, you can see the nice gap up, big volume. Look at that chart.
Yeah, it looks good. I tell you what, there are a lot of folks already anticipating strong results. The stock has broken out above that November, December double top and had been trading higher for a couple months heading into earnings and still got a nice pop with the heavy volume. So, yeah, I agree.
Yeah, absolutely. Now, we're not going to chase it. We like to wait till they report, let it settle down. My experience over the years has been sooner or later, this stock, along with many others, are going to pull back, to key support levels, and that's where you get involved. And you've got some comparisons down below.
Yeah, I was just looking at Honeywell relative to its peers. You can see trying to make a new relative high. So you got a group that's been trading higher, breaking to new 2019 highs, and you got a stock that's one of the best within the group. Yeah, I mean, I think you got to get a pullback. It's definitely extended, but I really like the stock.
Yeah, because this is pretty much a snapshot of what we look at. Company reports, gaps up. Might take a week, might take a couple weeks, could be a few days. Pull back to key support, get involved, keep a tight stop. Reward to risk is nice.
Yep, I think that gap support, maybe we'll see the gap support. That'll be down closer to 162.5, and you can see the 20-day moving average has been providing nice support, and that's getting close to that gap support. So I think, yeah, if we were to get down in that level, I agree with you. I think the reward to risk would probably suggest a trade there.
All right, the next one is MAN. Let's take a look at MAN.
Manpower.
Manpower.
Yep.
You can see that same picture. Beautiful volume. Big gap higher.
Yeah, this was a nice catalyst of this after the sideways consolidation. We had a nice move up, sideways consolidation, started to move up with increasing volume into earnings, but then an explosion. I tell you, I love these types of candles. This is referred to as a Maribozu candle for those of you that are candlestick fans, or maybe those of you that aren't. And essentially what that is when you gap up and you open at the low of the day and you essentially close at the high of the day. So you just have this long rectangular clear candle, hollow candle like this. That signifies that basically there was buying all day long. So when you think about how a stock gaps up after earnings and how the market usually reacts, normally you have market makers that are on the other side of the trade. They're providing liquidity. So when everybody wants to buy, they're on the sell side. That's why we tend to get a lot of gap fills. But when you get these hollow candles like this, to me, it suggests that we've got a lot of folks interested in owning the stock, a lot of demand. And so a stock like this, when it pulls back, is certainly something to keep on your radar.
That's exactly right. It's going to pull back. These are the kind of companies that traders look for. They want winners. Let it be really patient. Let it pull back to key support. Maybe it's a 20-day. Get involved. Keep a tight stop. You could end up with a nice winner here.
Yeah, and you said it right. I don't know that we'll see this stock back down at 88 where it opened. And you can see earlier today the stock went down to 95.17. Now it's back 96.77. You can already see that the folks, when it pulls back just a little bit, you've got buyers ready to buy again. So I agree. I think down the road somewhere you might get that 20-day moving up, get a little bit of a pullback. You might get a nice test off of that.
Here's another stock on our strong earnings chart list, DHR, Danaher. This one's kind of caught my attention today because you can see they reported a little while ago, made a nice move to the upside, and now they've pulled right back. They've tested that 50-day a couple of times here. And if it holds, you could have a nice move to the upside, but you'd have to have a tight stop on this one.
Yeah, I think Danaher actually just reported a couple days ago. I think that was on the gap up here.
Okay. Yep.
Handles. But the stock, the biggest problem with the stock is that it's in the medical equipment group. It's in that healthcare space, which has been beaten up so badly. DHR is the baby in the bathwater, just kind of getting thrown out. And that's, one of the problems with the stock, but it has been a great performer over the long term. I mean, we could go back and I could pull up a monthly chart and show you Danaher has been a tremendous long-term performer. So pullbacks into this stock tend to be bought up. And I would agree. I think the 50-day moving average is one level to watch. If somebody wanted to kind of key in on a couple of other levels, I'd be surprised if we go much below 122.
Yeah, I'd like it right at 120.
Yeah. Yep. That area. Well, 120, if we get below those two tails over there, I would think maybe we'd see some more technical selling personally. Maybe we get an intraday move below those two tails and then come back up. That might be an indicator at the bottom.
Okay, now here's a couple of stuff. Let's do a little predicting. There's a couple of stocks report. There's a lot of stocks reporting this week, but I've isolated 3.
Okay.
First one is Chipotle, CMG. They're going to report their numbers. I mean, it's just been a beast and a monster, and everybody's been waiting for it to sell off. But boy, if you try to short this thing, forget it.
Yeah, I would never short a company that is trading like this on a relative basis. I mean, obviously, there's a lot of folks jumping into the stock prior to its upcoming earnings. I mean, after its last earnings, you can see the huge gap up, to 570 or so from 525. And from there, it has continued moving higher. I suspect we're going to see a tremendously bullish report from CMG. But the question is it already built in?
Could be.
And that's something we'll have to see after the report comes out. But there's no doubt in my mind you're going to see a strong report here.
All right, let's take a look at Xilinx, another one reporting this week. XL&X.
Yep, and I think unless something has changed, I think this is still the high scooter stock. Yep, Xilinx.
Okay, there it is. Yep.
9. So it is still the top performing large cap stock according to Stock Chart's technical rank. And here you very much like CMG, gapped up with earnings in January, has continued rolling higher. I suspect they're going to have a great report, and they're in that semiconductor space, which has been on fire.
Last one is Amazon. Last but not least. Coming into its report, you picking up strength, but looks a little bit different than the other two.
Yeah, I'm on the fence here. I like the fact that it has finally broken out. It's trending above its 20-day, so it's starting to show some strength again. But notice as it's made the move the last couple of weeks, the volume has just kind of drifted. It hasn't exactly been huge volume since we had the breakout here in the third week of March. So I've kind of got some mixed feelings here. I mean, when we look at Amazon relative to the broadline retail group, it's kind of about where it was 4 or 5 months ago, which is unusual. Amazon, you think of as one of the leaders in broadline retail, and it has been strengthened in the last couple of months, but we're right where we were about 5 months ago. So I'm just not sure the group relative to the S&P here has not broken out above the January high yet either. So I just have some mixed feelings here with Amazon. What do you think?
I tend to, I'm agreeing. And by the way, this is the reason that our preference really is to lay low before the earnings. You can get involved in stocks, but if you do, you're taking on a big risk because you can't tell by looking at this chart. There's no guarantee on any of the three we just looked at what might happen. It could be a 10% pop to the upside or the downside. It's just too much risk. That's why we like to wait for companies to report, give them time to settle down, get involved in the best of the best. We have found that to be a good way to look at it and approach it.
Yeah, and I would just say this. I mean, those companies that we talked about, those first two, CMG and Xilinx, if they don't come out with good results, I would be shocked. I mean, if you think, and I just pulled up Facebook as an example. Facebook going into that report last July was just trading straight up. I mean, it looked like it was going to be the best thing since sliced bread. They came out and they missed badly on its lowered guidance. It was almost as if they kind of pulled the carpet out from underneath Wall Street. All the analysts, everybody that's been visiting the company had been buying the stock heading into its earnings report. Come in with that kind of news and you kind of lay an egg on Wall Street. This is basically what they do to you. And you can see a while for Facebook to regain some of the confidence on Wall Street. Now it's starting to move back up again. But so my point here is if you look at a stock like Chipotle, there's a lot of Wall Street interest in this stock. They've been going out visiting with the company. They like what they hear. If they come in and they miss badly or they lower their forecast, they're going to lose a lot of confidence on Wall Street. And that's a stock that I would be away from for a long time if they were to miss their earnings based on.
I agree, because it would take at least another quarter to prove that was an anomaly.
Yeah, at least a quarter. At
least.
That's a good thing. Good comment. I think anytime you get these companies that are looking like they're going to report blowout earnings, if they miss, you get a little bit of a bounce. Those are the types of stocks that I would be shorting.
Yeah. Okay, that's what I've got. What do you got?
All right. Well, I know we're going to do an event this afternoon at 4:30. So this is kind of a quarterly thing that I agree and come on board and do with John at Earnings Beats. Anyone who is interested, I think you had a link in your article.
Yes, in the article.
Yep. So let me pull up the Chart Watchers. And while I'm doing that, by the way, any of you who are interested in Chart Watchers, it is now weekly. It's not every other week. It's every single week, and it's free. So you definitely want to check it out. But John just did an article over the weekend. Obviously, we focused on companies that beat earnings expectations. But down toward the bottom here, there is a link that you can click and just go in and sign up. Join us later today at 4:30.
That'd be awesome. What we're going to do is we're going to be going over a number of stocks that are currently on the strong earnings chart list that I've reported already. And then looking at some like we just did now, looking at some other companies that have reports coming up over the next week or two and try to, zero in on a couple, that could end up being big scores. So we're going to get into that. And really, it's the timing couldn't be better because like I said, we've got thousands of companies come out over the next few weeks. This is a good time to really understand our concept.
Yeah, and I just want to point out in that webinar later today, I do anticipate talking quite a bit about companies that are looking solid heading into their earnings report. And hopefully try and spot some of these that the market is at least anticipating better than expected reports. And so at least give you a heads up on some of the companies maybe to be watching as earnings unfold over the next couple of weeks. So you can go into John's Chart Watchers article. I also will mention that I think I also put a link in my blog article today. So beautiful. I mentioned the analysis of the financial. So if you want to go in and read about that, you can. But down below where I do my Monday setups, I did talk about E-Trade. And then down below here, I mentioned that I was also going to be joining John. And so I also put that link in where you can click and get.
Really importantly, Tom, and I'll get out of here. Number one, I mentioned that we record all of our events. So if you can't make the live event, you can still get in on this. But the other thing, this is not insignificant. As part of the webinar event, you get access to our strong earnings chart list. We've got 250 stocks on the list. And anybody who's a member, every time we update the list over the course of the membership, they get access to all the new ones. And these are annotated, showing potential entry and exit levels. So that in of itself is something that people might be interested in.
Absolutely.
All right.
Yeah, always a pleasure to have you on here, John. Enjoy the week, and we'll see you in a couple of weeks.
Take care.
All right. There he goes, Mr. Hopkins from earningsbeats.com. You can see on your screen the 6 stocks that we just talked about. And again, we will be going over a lot more later this afternoon, and feel free to join us at 4:30 Eastern if you would like. All right, Erin, it is time to get into the 10 and 10. I'm assuming you have an RRG for us.
You are very much correct. Let's go ahead and take a peek. All righty. I actually took NM out when I did the RRG because it was such an outlier. It made everything else very hard to see, but it was traveling northeast about up here. So, but here you go. Had a lot going in that northeast direction. That's what Julia says we want to look for. And then when I went through the sectors, technology, of course, is leading. Interesting, though, only one healthcare, one financial. So we'll probably look at both of those. All right, let's go ahead and get started.
All right, we are going to start with Tableau, which is data, D-A-T-A. And I put a bunch of annotations on here because I tell you, this one is kind of confusing me a little bit. Number one, it's in the software space. Software has been on fire. This stock was a great relative performer back at the end of last year and into right at the beginning of this year. But since the beginning of the year, you can see relative to its software peers, it has been declining rapidly. And you can see it doesn't seem to be any slowdown. So the fact that we saw the volume pick up on Thursday and we closed below really at about a 90-day low, that is a little bothersome. So I really think this stock needs to turn around pretty quickly. I'm going to say that after making the breakout back in December, and we pulled back and put in a pretty important low here around 110, this 110, 120 level is kind of a cautious area for me. If you wanted to take an aggressive stance, this is an area maybe where you could get involved. But I think if the stock closes below 110, I think I would be out of it. I don't like the relative strength. I mean, you're in a great performing area of the market. You were one of the best performing stocks within the space, but something has changed here in the last 3 or 4 months. Maybe it's just sideways consolidation off that big move that it had to the upside. But again, I would really like to see this turn back to the upside sometime in the next, no more than giving up maybe $7 or $8 more to the downside. 110, 120, I think is a key area.
All right. The most popular in the chat room is Square.
All right, Square, good news. It's in a great area of the market. Bad news, it's one of the worst performers, or it has been in 2019, really been struggling. I like today's candle so far. We've got a nice piercing candle. Maybe it becomes a bullish engulfing candle. Like to see the volume pick up a little bit more. If we fail to make a new high and later today it starts moving back down toward the low, that is not going to be a good sign to me. So I think there are some things to watch here. But as far as annotating, the problem I have, well, first I'll give you the reason I like the space. You can see that the financial administration stocks not only moving higher, but they have been outperforming the S&P 500 for quite a while. So you're in a good space with Square. Now, Square itself, you can make an argument, okay, maybe this is an inverse head and shoulder. It's been going up, pulls back left shoulder, neckline, head, right side of the neckline, and now maybe this is an inverse right shoulder. After making this move, look at how we had gapped down and on heavy volume, came down to the 20-day at about $68. I would not want to see us go back down because after getting to that 68 level, we turned around, went back to 82. Now we're coming back down, testing right around 70. I would watch 68. I don't like the negative, not really a negative divergence, but just the relative weakness in the stock versus its peers. So it has been now moving to a multi-month low relative to the S&P 500, and it's in a space that's been doing well. So imagine if money all of a sudden stops coming into this space and you have one of the weak performers. That's what you have to be careful of, and that's why I would personally keep a stop. I'm going to say 67, 68. That's as low as I would want to see this stock go.
All righty, let's see. The next one up is going to be an ETF for us, the Oil and Gas Exploration, XOP.
Yeah, first of all, crude oil having another big day, and we're getting a breakout here. So the XOP, I think, is, if you like energy, I think as long as it trades above the 20-day moving average, it's a great way to play the energy space. There's no doubt that we are beginning to see some nice rotation back into energy, at least getting its fair share on this move to the upside here. But after breaking above the 31.5 area, it's basically been holding that level. I'm going to drag this down just a little to these closes. I think as long as we stay above about 31.30 or so, I'm okay with the XOP. We're getting a nice breakout. And as I mentioned, crude oil prices, I think we're up a couple percent, maybe 2.6, 2.7% earlier. I'm not sure where they are right now. But energy, as I mentioned at the top of the show, leading the market to the upside, and we're getting a breakout here. So I think you're fine owning XOP. I just keep in mind that energy relative to the S&P has been a laggard for quite some time. So if the stock or this ETF begins to break down back below, say, 31 and a quarter, I would just be careful because this is an area that's underperformed.
Okay, let's see. Next one up, CLB, Core Laboratories, Oil and Equipment Services as well. Well, no, it's a little different, not exploration and production.
Yeah, it's got a nice breakout. I like the fact that it moved up to about 72.5. It had been in this downtrend. Reacted, there were actually a couple levels. First, around 70. Broke above that, got to 72.5. Came back down. Started this move back to the upside and then made the breakout above this area. I think the rising 20-day moving average has been showing strength. I'm going to say very similar to what I just looked at on the XOP. I would want to make sure to the downside that we don't lose key areas of support because this has been a stock that has underperformed the S&P for quite a while. Now that we're making a breakout, we don't want to see it roll back over. So just keep a fairly tight stop, but I like CLB.
All righty, one that's going in the right direction on the RRG, Tech Resources, TECK.
Yeah, another one, I don't like that shooting star false breakout right there. I think short term, that is usually a warning sign. You can see we've pulled back off of that. But overall volume trends here are pretty good. And we did bounce the last few times off of the 20-day moving average, which I think is a really positive sign here. So you can see since breaking above the 20-day back in mid-March, we have had multiple tests of the 20-day. So that's something I would certainly keep an eye on for entry on any pullback. Also notice that the breakout that we saw, we had a little bit of gap support right here and the prior high here. So I'm going to say 24 and a quarter is really good price and gap support. And then also that's the 20-day moving average coming in at 24.11 right in the middle of there. So I think this pullback is viable. Stock was trading up over 25.5 just a couple of days ago. That would have been Wednesday of last week. And now here we are down more than $1 and getting closer to this support area. So I think it's a stock that's showing pretty good signs, nice volume, breaking out. And I think this pullback is viable, especially on the 20-day.
All right. This one I said was that outlier, but I looked at the chart, found it interesting. NM, Navios Maritime.
All right. I think this might be one of those shipping stocks. I'm not positive.
Yes, marine transportation.
Yep. These stocks have just crushed me over the years. I just personally, I won't trade them because I just can't seem to trust these technical breakouts. Clearly, we have a technical breakout here. I'm going to pull up the relative chart on this one because look at what happened before. I mean, the stock went from 9 down below 2 in about 6 months. So yes, it's strengthened, but I have seen this so many times before. Here it was strengthening a couple of times back in October, and we just went right back down. This is a little bit different because we now have a better configuration, 20 above the 50, stock trading above the 20. Look at the volume coming in. So if you really like the aggressiveness of a stock like this, I would certainly just be careful if it were to go back down. This is an area where we had a couple of tops, almost got there with the heavy volume back in the second week of March, and then ultimately we broke out with heavy volume. If we pull back to that 350, 370 area, we're going to be hitting price support and the 20-day. We should bounce off of that. If it breaks below 350, I'd have to let it go. And you can see the stock's at 420 right now. So if you buy it here and you're using that as a stop, you're talking about almost 20% downside. And that's where a lot of that risk comes into play. I'm not interested. I would pass because of some of my experiences with the stock. But looking technically, I would watch those levels that I just talked about.
All right. Sounds good. Let's see. How about the Singapore ETF, EWS?
Looks pretty good. I'm going to stretch it out to a year just so we can get a little bit more information here on the chart. Yeah, I really like the fact that it's consolidated for a long time here. You could almost, probably draw a neckline. That essentially is a neckline, left shoulder, neckline, head, right side of the neckline, right shoulder, and a breakout, increasing volume. That would measure 24 and a quarter down to 21 and a quarter, $3. I'd be looking for a minimum target of 27.50 or 27 and a quarter, something like that on this breakout. So I think it looks pretty good. Now, trying to get the best reward to risk, I would maybe be looking for that 20-day test. That would be one area. And then also the price support area where the neckline was. I'm going to say 24.20 up to about 24 and a half. It would be an accumulation zone for me on EWS.
All righty. Our only communications services sector request from media agencies, OUT, Outfront Media.
I really like Outfront. Now, it is pulling back. We had a slight negative divergence, lower PPO, higher price. Maybe we're going to get this 50-day test. You can see we've been holding the 20, but with that negative divergence in play, we may actually break down below the 20. Volume has been light, though, on the selling. So I think the 50-day, if we could get down there, would actually be a pretty nice entry point. So let's just annotate this one. There was kind of a breakout area. We went up, pulled back, hit the 20, and then we broke out, and we've been holding that. So there's your first area of support around $23. But I like it there on the 50-day if we were to get down there. So $22.50 to $23, I think, represents pretty good entry here.
All right. Our only consumer staples request, Constellation Brands, STZ.
Yeah, I mentioned the distillers and vintners earlier, and one of the reasons that they're so strong is Constellation Brands. This is a stock that has, I think, completely changed the character of its chart with its last earnings report. Big breakout to the upside. It's just overbought right now. I mean, the last 2 days between Thursday and today, we've already seen this stock make a huge run. It's up $13 in just 2 days. So I think that you've got some recent price support right there. You can see we had support back in November, bounced, broke down, came up through that level, and it held on that bull flag. So the breakout of the bull flag was around 194. I like it if it pulls back and hits 194. I would consider adding close to 190, and then I would look for a continuing move to the upside. Now, I'm not saying the stock's going to get down to that level. I'm just saying if it does, I like the reward to risk. It may stay up around 205, move to 210, maybe somewhere down the road, this 20-day moving average moves up to 200, and it might come down and hit the 20-day, and that might be the level. So it's a stock that I would certainly keep on a watch list. I just don't like to chase because as soon as I get in, I guarantee it's going to be that we're going to get that $13 pullback to test gap support. So I'll wait and see, but I like the stock. I like the change in character. And I do think in time, this is a stock that's going higher.
All righty. How about AMD as our final one?
All right, AMD, it's in that semi space, and I know it pulled back last week and hit the 20-day or got close. Yeah, actually it hit the 20-day. I like it. Again, I like the area of the market. I like semiconductors. This is a stock that I would be looking at on a 20-day test. It's got the PPO. It's been above the center line now for 3 months, a little over 3 months probably. And these 20-day tests, for the most part, have been pretty solid entry points. So it's a stock I like. And if I was, again, looking for entry, I would be waiting. You can see last week we got that 20-day test. A couple weeks before that, 20-day test. The big move here on heavy volume came right off of the 20-day. So this is an area to watch for. But I think ultimately we are going back. I think longer term we're looking at a cup. I think this is coming down, had a little bit of a rounded bottom. We're starting to make our way back up. I suspect we're going to see 33, 34 on AMD, probably in the not too distant future.
All right. Well, that does complete the 10 and 10. Here are the symbols that we just went over. I will have these up in the Market Watchers Live recap after the show. They'll be also in the Market Watchers Live chart list. So go to the articles tab, click on the Market Watchers Live blog, and the link to those symbols and the annotations that Tom just did will be there in that live chart list with the link at the top. All right, time for our final market update. Let's see what is going on right now. All right, here we go. Make sure this is completely up to date. As you can see, market's a little bit flat right now, especially when you look at that S&P 500 and NASDAQ. The Dow, though, however, had a really bad morning with the gap down, but made its way back up. It looked like it was going to make positive territory, but it's pulling back again. Like I said, S&P 500 still managing and NASDAQ managing to stay in positive territory. S&P 400, the mid caps, not making that big of a move back up after hitting intraday lows. And you can see that the Russell 2000 is trying to make that move back up to positive territory. Looks like it's taken back about half the losses so far today. Canadian markets just on a downtrend, pretty much straight on down here in a declining trend, currently down a little over 31 points. Treasury yields gapped up, moving sideways, so they are up today at 2.583%. The VIX, big gap up. Wow, we had a little bit of nervousness in the morning, but pulling back somewhat. Currently a reading of 1280, which I would say is still in the complacent category. UUP, dollar, gap down, moving a little bit lower. Interestingly, GLD is mostly unchanged, not able to take advantage of the fact that the dollar is moving lower, which doesn't surprise me. I'm quite bearish gold right now. USO, big gap up, starting to move higher, looking pretty good. Currently reading $13.71. TLT, big gap down, moving sideways, basically took back all of the gains that we saw back on Thursday. And finally, let's look at the sector summary. And I want that to be completely up to date as well. Energy sector is leading, up over 2%. Certainly the sector leading the rallies that you are seeing, apparently. Consumer staples and technology are right there behind it, up only slightly, but those are the three sectors that are currently in positive territory. Biggest loser, real estate sector, is down 1.6%. And that's all I have for the final market update. I'm going to pass it to you, Tom. Get ready for sentiment.
Okay, I'm going to go ahead and just pull up a chart to kind of illustrate something I was talking about earlier with the energy. You can see that long term, this goes back 10 years. It's a daily chart. On the top is energy relative to the S&P 500. And you can see since topping back in 2011, this has been a group that's really, if you're trying to outperform the S&P 500 and you're trying to do it with energy stocks, it's kind of like swimming against the current. Very, very difficult. You got to really be a great stock picker to find the right energy stocks in order to outperform the S&P when the entire group of energy is underperforming like this. Now, the primary reason you can see about the time that the underperformance kicked in on the XLE, it was the same time the dollar bottomed. And so the dollar, as it's making this move, look at the huge move on the dollar and look at the huge drop in energy relative to the S&P 500. When someone asks me about energy, I can't help but mention it's got to come down at least in part to what goes on with the dollar. So here you can see since early 2018, the dollar has been back on a move. And if you connect these bottoms, you'll see that we have a trend line in play. So it's hard to get behind energy longer term when you've got the dollar that continues to remain in an uptrend. This relative sideways action that we're seeing in 2019 coincides with the sideways action we've been seeing in the US dollar index. So let's see which way the dollar breaks. If the dollar breaks to the upside, some of these energy stocks that look pretty good could completely fall apart. And that's why if I'm trading energy or I'm trading materials, I want to make sure I have a tight stop because both of these groups have been underperforming for 7 or 8 years as the dollar's been moving higher. So I just wanted to point that out and help to illustrate something I mentioned earlier in the show. But I'm going to turn it back over to Erin. I know you've got sentiment. Everyone looking forward to what's going on there. So take it away.
All right. Let's see what we're looking at today. All right. This is our decision point sentiment update for April 22nd, 2019. I'm going to be looking at quite a few sentiment indicators that Decision Point follows. The 10-day moving average of the put-call ratio, the AAII, or American Association of Individual Investors. They have a poll, and we'll look at that. National Association of Active Investment Managers, NAME. They report to us how exposed they are to the market. So we'll find out what the big guys are thinking. RIDEX ratio, this is going to give us the actual cash flow of what's going on in the market. Wall Street Sentiment Survey will tell you what market timers like myself are thinking about the week we're getting ready to start. And the VIX, that's certainly a sentiment indicator as far as I'm concerned. So we'll look at that a little more closely. And then finally, we do track gold sentiment. So I will be talking to you about that briefly as well. All right, but let's go ahead and start looking at some of these charts. So I've got a couple of them in here for you. Look pretty good. All right, so we are going to start with the 10-day moving average of the put-call ratio. And we look at it for CBOE, equity, and OEX. Just a caveat, you might notice that the OEX put-call ratio tends to travel not in the same direction with the other two. As you can see right here, we had two deep bottoms, and yet we were at the top of the range for the OEX put-call ratio. My understanding is that this is used a lot of times for a hedge, and so sometimes you're going to get different readings as far as the put-call ratio is concerned. Right now, as you can see, we are in overbought territory for both the CBOE and equity put-call ratios. And, that is considered overbought. I do flip my scales so that I can look at overbought being at the top and oversold being at the bottom. So when you're in overbought territory, what do you expect? You should start expecting a decline. So at this point, looking at these overbought readings, and they're not really leaving just yet, I would look at this as bearish for the market. I would be getting more bearish if I were seeing a concerted decline, the decline right now isn't, it's more twitchy. I'm not getting an actual reading, in my opinion, that we've hit the top and are moving down. All right, next one up, AAII. Again, American Association of Individual Investors. You can go to their website at aaii.org. And I think if you scroll down, you are able to take the, poll yourself as well and be included. But let me make sure I've got this completely updated for you. There we are. So one of the things I'm noticing, first off, I'm just going to go right into it, is the bull-bear ratio. Obviously, we use the 2 area as considering it overbought, I suppose you would say. And that means you have twice as many bulls as you do bears. And as you can see, we're right up there. We're almost at that 2. So we're currently holding on. We've got a lot of bulls right now still. But you'll notice it's really been flat. We haven't seen a huge increase per se in the bulls. The main thing what we're looking at is the decrease in the bears as far as the polls are concerned. I mean, we had people quite bearish, of course, at the end of December, not a surprise, but you can see it's really the bears have been moving back. And currently, we're not at the lowest reading, but very close to the lowest reading we've seen all year at minus 21.8. So 21.8% are bears right now. When you have fewer bears and lots of bulls, it's sentiment. So sentiment is contrarian. And too many people right now are bullish, and a lot of people are leaving that bear camp. Looks like they're moving more neutral because we're not getting that increase in the bulls. But overall, I would be looking at this as pulling back on those bears as bearish for the market. Next up, name exposure. Active investment managers, how exposed are they to the market? Well, as you can see right now, highly exposed. We're looking at some very climactic readings still. But as I noted, and you can see right here in the thumbnail, a lot of times these guys get it right. And so we haven't really seen the pullback that I would have expected, but you can see that, for the week, we did end up a little bit lower, kind of sideways after these two big, two climactic readings, but now we're even higher at 93.37 as far as that exposure index is concerned. So I would be looking at that as still bearish for the market. Haven't really had that a really good pullback or correction just yet, but this is kind of pointing us in that direction. All right, Wall Street Sentiment Survey. Let's see, which chart was I going to show you? This is the one. And it looks a little weird, kind of blocky. It is a daily chart, and since these are weekly readings, they just carry through. But I think it's easy to read and to see with it like this, so I left it like this. But as you can see, we had an increase in the bears, but not much in the bulls. So that's a very different reading, really, when you make a comparison between what we saw in AAII, which saw the paring back of the bears and the bulls staying about the same. At this point, as far as market timers are concerned, we increased our bearish stance. And by doing that, notice that the bull-bear ratio, of course, moves away from those climactic readings. It's still rather high because, as you can see, we've had much lower readings for that bull-bear ratio. But we're not looking at climactic readings at this point as far as the number of bulls versus bears. So I would look at this as more neutral. Even though we had that increase in bears, we still stayed about the same as far as bulls, and moving that ratio closer to 1 tells me that as far as market timers are concerned, we're pretty much split down the middle. I did go in as neutral for the week. All right, next one up, RightX analysis. All right, this is an indicator that is, I guess, exclusive to Stock Charts and Decision Point. We came up with this indicator, or I should say Carl Swenlin came up with this indicator. And what he found is that a company called RightX, they're no longer in existence, but these funds are now managed by Guggenheim. We just kept RightX because we always called it the RightX ratio. So we just kept it for posterity, I guess you could say. So in any case, there's this basket of funds that RightX had that managed. Guggenheim, like I said, still has them, but there is a group of bear funds and an equal amount of the bull and sector funds, and then there's the money market funds. And what happens is every single night they report how many assets are in each of the funds. And so you can track actual cash flow and where the money is going based on, tracking these assets that we get every night. And so we've continued to do that with stock charts, and I think these charts are really invaluable. All right, so what is this telling us? Well, we have the bear funds up here, and we're really flat. We took back a bunch of assets from that the bear funds, back here right when we had that spike to the upside again. Sentiment is contrarian, isn't it? So anyway, we had the bear funds pulled back on the assets. We're now really flat there. And look at what's happened. We had an increase last week in the bull and sector funds, but then we came back down lower than we were at the start. So we did lose assets in the bull and sector funds. But I thought the interesting thing for today was this increase in the money market funds. So what is this telling us? All right, well, nobody is getting more bearish because we're not seeing more funds, more assets in that bear fund area. They're pretty much flat. And with the RIDEX bull and sector funds, we saw a little bit of a decrease, but we got this increase in the money market funds. So we're seeing the bull and sector funds, and the money is going out of those and going into money markets. That's the neutral category. So to me, with more people going neutral, more assets moving into the money markets, I would look at this particular RIDEX chart as more to the neutral side. But it is interesting to see that we had assets pulled from those bull and sector funds over last week. All right, we've got two more real quick here. And let's see, we're going to look at the ultra short-term indicators. This is the VIX right here, and breadth is what I watch. And the VIX is turned around. It's inverted because overbought should be at the top and oversold should be at the bottom. And for me, when you're looking at sentiment, low readings mean people are very complacent, and sentiment being contrarian, that's an overbought reading. So when people get too comfortable, that's when we start looking for those reversals. And if you pull up this chart, it's in my Decision Point live chart list, and you start running vertical lines here on these tops, they almost always coincide with a decline or at least a movement sideways. So currently, the chart isn't telling us too much. The VIX is right there in the center of these Bollinger Bands. The VIX is most helpful when we get those punctures of either the upper or lower Bollinger Band. And obviously sitting in the middle isn't all that helpful. So I'm not getting too much here off of the VIX, except for the fact that we are below 15. And, honestly, anything right around that 14, 13, 12 level is pretty complacent. I mean, we certainly saw lower readings back here last summer, but I would say this is in that complacent range currently. The other thing interesting to look at this chart would be that decline of the new highs. So we're seeing a pullback as far as breadth, and that, I'm seeing that pullback. So that tells me that, that's sort of a bearish, that's a bearish setup here. You've got new highs, the breadth is starting to contract. And at this point, it's not going really opposite what the market's doing. We're getting that pullback, and the price is moving mostly sideways. I would just expect that same consolidation or sideways movement based on this chart, because this is really the only information I'm gathering, because the VIX isn't very helpful. And certainly the advanced declines, we're almost looking flat. So that's not very helpful. All right, last two I think we have, or one more. One more is gold. I think this is the one I wanted to show you. Yes. So I've been bearish gold. And Tom McClellan was on the show last week, and he was also bearish on gold because he saw, as I do, this head and shoulders pattern. And it looks like it has executed at this point. The measurement for the pattern would tell me to expect a drop to test these lows all the way down here at that 1200 level. I would be looking for that. The discounts on the Sprott Physical Gold Trust, which is what we follow, are moving a bit lower. So we're losing some of the discount rate on this. And also I have GLD up here at the top, and pretty clear descending triangle. And that is a bearish formation, just like the head and shoulders is. And we're getting the breakdown below that. PMO is on its way down. I would be looking, I continue to be bearish as far as gold is concerned. All right, so that pretty much does it for sentiment. Let's do our, I just want to kind of do our calculation, which ones are bearish, which ones are bullish. So we've got a bearish for the market, very bearish for the market, somewhat bullish. Okay, so that's a little bit different on the tallies. And then we have a neutral as far as RIDEX, and the VIX looks it looks neutral going into this week, just like I am. So I would say we're looking at a neutral to bearish going into the week right now. So kind of interesting as far as sentiment goes that way. And then of course, gold sentiment is somewhat separate here. And we're seeing really bearish activity and characteristics on the gold chart. So I'm continuing very bearish for gold. And that is all I have for the sentiment update. So let's go ahead and wrap things up today, Tom. I know you had some charts I think you wanted to show.
Yeah, we can go in and take a look at a couple of charts before we get into the poll to wrap up the show. So let's, first thing I want to do is just pull up the price of crude oil, because we have gotten up to $65 a barrel, just over that. We're having a pretty good day today. And you can see that the $65 a barrel, if you go over here and look at where these lows came in back in June, and then again in July, right about $64, $65. So this is an area where we've been hesitating. This does not show today's action, by the way. I think we're up $1.60, or I think it was 65, 67 the last time I looked at it per barrel, which puts us right into this key overhead resistance area. So crude oil is definitely against some overhead resistance. And as I showed previously after the last market update, energy tends to struggle on a relative basis when the dollar's in an uptrend. So we have a couple of things we have to be thinking about here as we go forward. Now, there were a couple of charts that I wanted to show you. ExxonMobil was one that I think had been looking pretty solid today. I mean, you can see it trying to make this breakout. I was going to stretch this out. Actually, I've got a relative chart. We can go with this. So when you look at the group, Exxon relative to its group now has broken out to a 52-week high. So the fact that Exxon is moving up and that's leading the Dow, this is just one more area of the market now that is starting to strengthen, which I think will help the Dow as we move forward. Chevron, the same thing. I'm not going to bring that chart up because I wanted to give you a couple of alternatives just on a couple of smaller stocks that are having really strong days today. One is Denbury Resources. Huge. It's up 15% today, but look at the area. It's trying to make a breakout. This looks a little bit like a bottoming reverse head and shoulder pattern with a breakout above 250, 260 being very significant. CRZO, another smaller company. You can see trying to make this breakout, consolidating off of a lot of selling, trying to get through 1350, which I think would be very important. Look at the volume picking up here on this breakout. And the last one I had was XOG, which again, a small dollar stock. Beautiful breakout earlier in April. Little cup maybe. That we might put in a little bit of a top, but I think a pullback anywhere near $5 on XOG looks interesting. So those were just a few stocks I wanted to mention, but let's go ahead.
PPO looks good on that one too.
What does?
The PPO.
Oh, okay. Yeah, PPO was turning up. Yeah. All right. DNR was one of the stocks in the poll. I didn't even realize that. 28% went with DNR.
I think that was an audience, or not an audience. I mean, a staff pick.
Yeah, definitely. While they're doing their producing, they probably looked at one that was high, I'm guessing. And this is one that's either going to be make or break the DNR trade. So that'll be very interesting. I like MSCI too. That's a specialty finance.
Well, I have to say CGNX came in last place last week, and it did very well. So I'm not going to be deterred by the fact that MODN, my Monday setup, is near the bottom.
Yeah, I should be excited by Verisight then. My second pick being on the bottom. Maybe that'll be the theme going forward. That the ones that we dislike the most or don't like as much, maybe they become the outperformers.
There you go.
I don't know.
I'm going to write the DNR and see what the audience is going to get for a price. Audience is getting $2.56 for their price.
Wow. All right. We'll have to wait and see how it goes. But interesting that the producer picks are at the top, the two producer picks. We're going to have to turn the show over.
What do they need us for?
Exactly. When you turn the show over, they can take it away. Anyway, we got to get rolling here. There's the upcoming schedule. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. It's located below your video player. We'd love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll see you back here tomorrow. Happy trading.